I'm now introducing our next moderator, Mary McKenna from Awaken Angels, and she will guide us through the presentations of the platforms and angel-friendly co-investment funds. So again, those tools that wherever possible at cross-border level, but still where this is not the case at national level, are supporting angel investing to scale up their companies. And Mary, the floor is yours.
Thank you, Luigi, and great to be here, everybody, and very nice to see so many of you here on the call. So, as Luigi has said, our panel is going to discuss the role of platforms and angel-friendly co-investment funds in promoting and increasing opportunities for cross-border funding. We've brought together a number of different people from the ecosystem that represent both of those groups, and we have 6 people on the panel. So I'm going to ask my panel members to please be brief and please don't talk for any more than 5 or 6 minutes each. And Marc, you're the first stop. So I'd like to introduce you to Marc, who is fund manager and managing partner at Angelwise. You're very welcome, and the floor is yours, Marc. Thank you.
Thank you, Mary, for that introduction. Alex, I think you have the slides. There we go. So we are a fairly traditional VC fund, but we still position ourselves on the border between VC and business angel financing. So how are we? We're a very small fund, 20 million, closed end. What makes us special is that half of that money comes from business angels. Yeah, more than 90 business angels have contributed to the fund. We co-invest with business angels or with later stage funds, and you can see the ticket sizes here. Next slide. Most of you will have seen these style of graphs where family and friends, the third F we don't use anymore, families and friends invest first, then business angels, and then together or immediately after, that is where we position ourselves. So typically before other, typically also bigger VCs invest in companies. Next slides. What are we looking for? Cutting edge ICT innovators. So we don't have a specific vertical focus. So any early stage deal that has some ICT links, that is local. We are based in Flanders in Belgium. We look over the Benelux, so Belgium, Luxembourg, and Netherlands. Typically capital efficient small businesses with some early traction already. Next slide. And then who are we? Small fund, 20 million, 3 people. All of us engineers, and all of us, what we say, we have done it before. Myself, my experience is mostly with SMEs, so small and medium-sized companies, growing companies from 0 to 50 people, say. Jan experience is very complementary to that, has large experience in large telecoms, other corporates, and was a hands-on business angel. I was also a hands-on entrepreneur, by the way. And then Ruben is our junior, who takes more care of the technical part. He is an AI specialist, and most of the deals we see right now, of course, have some AI components to them. So what do we look for? Typically, the companies that we invest in are already at TRL 7+. Yeah? So there is already a proof of concept, sometimes an MVP, but mostly initial commercial traction. About 1 in 10 is on TRL 5, so no commercial traction and purely a prototype level. The team is very important, local companies, and we do that together with business angels. But to make that absolutely clear, we want good financial returns. So we are a for-profit fund. We do this to return the money to our investors, business angels. We do that co-investing with business angels. Some of the times they overlap. So sometimes we co-invest with business angels who are also a shareholder of the fund, but sometimes with other business angels, or most of the times even with other business angels. Next slides. These are some of the logos on the left, the current fund, in the middle, the previous fund, and on the right-hand side, some that have already exited. So we've been in this business, Jan and myself, for over 20 years. We've gone through a few hype cycles. I noted down Hubert's tips of long-term is important, and it is a long-term game. And don't be fooled by TVPIs. So by valuing your company based on the latest round, the real key is in DPI. So the cash you get back on your investment, which will only be realized once you exit the companies you invest in. Next slide. We work with a lot of different players in the ecosystem. So the top group are basically all VCs, private, public, and combinations. On the bottom left side, Ban Flanders. We're established and have a partnership with Ban Flanders, but we also work with other angel investors. And then bottom right is typically tech transfer offices, incubators, and the likes, who also bring us deal flow. Next slide. Just to give you an idea how quick we deploy the money. So 2022 funds, we currently have about 6 million invested. Thank you, Alex. 6 million invested. We do reserve more than half of the fund for follow-on investment in our portfolio companies. And then next slide, what makes us different from other VCs? Thank you. Where I don't agree with Hubert saying VC is passive. Out of those 90 business angels who have invested in the fund, 30 of those have said, we've asked all of them, of course, that they want to help our portfolio companies. So they assist in introducing the companies to large corporates, helping them with growing their business. And then final slide. And maybe just as a slight provocation, I feel that one of the best way to invest cross-border, if you don't know the ecosystem, Hubert also said legal and compliance is very important. One of the best ways to start investing cross-border is to invest in a local early stage fund like ourselves. And with that plug, I give the floor back to Marc.
Thank you, Marc. And before you leave us, maybe perhaps a couple of words about any future plans that you have in Angelwise, or any things that you're going to do differently in the future.
No, I think we're thinking about that right now, as we are starting on thinking about an Angelwise 2 fund. But frankly, there's not a lot I think that we would change. We like the cooperation with the business angels as LPs. So the fund management, so the GP takes the investment decisions, though the 90 LPs are not involved in the investment decisions. But we are open for them to use their network to help the companies we've invested in. And we find that both from our LPs and from the portfolio companies we've invested in so far, they feel that is a very fruitful way of collaborating.
Yeah, thank you very much, Marc. And next up we have Francesca Natali. Francesca is director at the Ingenium Fund. Francesca, you're very welcome, and the floor is yours if you would like to give your presentation, please.
Yes, thank you very much, Mary, and welcome everybody. Let me share my screen with you. So today I would like to share with you my experience as a managing director of Ingenium, an angel co-investment fund, which has been launched thanks to the initiative of Regione Emilia-Romagna using the ESIL money. So the Ingenium funds can be considered as a very good example of public-private partnership involving business angels, accelerators and corporate ventures. The Ingenium funds we have been managing here in Italy and also in other European countries like Poland and Slovenia have been launched thanks to the initiative of public government rather than regions. And we as a private managing company have been in charge of implementing all the activities related to the management of the funds. All these funds have been set up as agnostic funds, and they have been working with local and national and sometimes also international investors investing in very early stage initiative, many of them coming from research labs, university. So we played a very crucial role in setting up startups and innovative companies, investing and exploiting local knowledge and local assets. I would like to draw your attention on our most, let's say, successful co-investment fund, building on the previous initiative always launched by the Regione Emilia-Romagna. So Ingenium 2 funds in Emilia-Romagna has built on our past experience in managing smaller venture capital funds. So it has been generalistic funds investing more than 35 million euros in 14 companies. We had a couple of very, let's say, relevant exit, and we have been, let's say, capable to involve in our 14 deals more than 100 business angels from Regione Emilia-Romagna, but also from the rest of Italy. As I said, the funds has been managed by Meta Ventures, and our investment ticket as average was around 1,200,000 euros. Our, let's say, main point of, let's say, we have done with the Ingenium Emilia-Romagna funds, it has been, to work very closely with business angels and supporting their investment capabilities. The public money that has been invested into the Ingenium Emilia-Romagna fund came from ESIF money, which have been allocated to the funds through the Regione Emilia-Romagna, aiming at supporting the creation of new innovative companies within the region. So what I would like to underline with reference to the experience we had in managing such fund in Emilia-Romagna, it is that we contribute quite a lot in supporting the development of the business angels ecosystem, not only in the region Emilia-Romagna, but also in Italy, and we, find a very good way to work together with a number of clubs and business angels, because we work together with these clubs, sharing our experience and also sharing the due diligence, and also sharing legal templates with them. So we define a common way to work together, and working with the Italian Business Angels Club in building exit from the very beginning. This type of fund has been a quite unique, let's say, experience for the Italian market. And even if, we reach some good exit, they have been suffering from their small dimension and their geographical constraints. So what, we have learned from the management of this fund, it is that it is very important, especially if you are working in an environment where early stage investment, it is not so well developed. It is important to use also private money to support the growth of the ecosystem. It is important also to have management company coming from the private sector in charge of these investment tools, because it is the best way to find an alignment of interest with the private investors, meaning the business angels, that act as a co-investors for such type of fund. I believe that they have played a very relevant role for supporting the startup and the startup of a number of knowledge-intensive companies in the region and in the country where we manage this fund, but more, let's say, tools like this with some, let's say, with greater investment capabilities are needed. This is our portfolio from Ingenium Emilia-Romagna. Few companies are already in our portfolio, but I would like to mention a couple of success stories. The first one, it is our, let's say, most relevant exit so far, which is Spriggers, which has been acquired by Voxnest, a very important players in the podcast market in the US. It is not only about Spriggers. We have more companies coming from the investment we did in Emilia-Romagna. We are still managing a few of these companies, just to say that such type of funds need to be very patient.
I'm sorry to rush you, Francesca, but we're running out of time. Sorry.
Yeah, sure.
Please,
so that's my last slide, Mary. So Greenbone, it is another company from our portfolio that we believe could, grow and become a unicorn in the European market. So thank you very much.
Thank you. Thank you so much. That was very interesting, Francesca. Really appreciate that.
Thank you.
And now, folks, we're going to go for something completely different. We have Oliver joining us Oliver is the director of the European Crowdfunding Network. Oliver Gajda, would you like to take the floor, please, Oliver? Thank you.
Yes, hello. thank you for inviting me. I don't know if I will try. Oh, you have my slides. That's very good. So there's my name. Eurocrowd. We are a trade network, just similar to Business Angels Europe, and also a small advisory. But we can move to the next slide because I don't want to talk very long. I just want to speak a bit about what crowdfunding has to do here. And we worked for the last 12 years, even a bit more, to actually create this in order to be able to scale access to private capital and not only sophisticated investors, but also retail investors. The European Commission, and we work with them closely on this, has created the European Crowdfunding Service Provider Regulation, which is in force since 2021, so very new. Therefore, we still see a few issues in the market and how it is being, implemented member state by member state. But it basically is a harmonized legal framework for public offerings of private equity, but also debt, together tradable securities under capital market law, as well as loans, bank loans, of up to 5 million euros per year per SME. That needs to sink in first. It's quite a lot of money if you're able to raise this, or the platforms that you work with are able to raise this. It lowers the barriers for cross-border investments because platforms are the license holders and actually therefore the place of the issue in the member state where they are registered. And from there, they can attract companies from all over Europe and also investors. And they can also, if they choose to, direct market each issue in different member states if they adhere to the national routes for consumer protection marketing. So it's a fairly broad market if you're able to do this. We are at the early stages. We have 2 platforms that hopefully will speak in a minute and tell us a bit more about this. It also introduces the limited liability company as a so-called admitted instrument under EU capital market law. That is in some member states potentially already possible, in many others it's not. But now a limited liability can do a public offering of, in this case, private equity. It allows for direct investment. That is what it is designed for. So individual investors join together and invest directly into one company, be it equity, debt, or loan. But at least for tradable securities, this also works through indirect investment via a single asset SPV, which enables us to invest into companies that are not admitted, that may be illiquid assets, or non-divisible assets like infrastructure, in renewable energy and so on. And so that gives quite a bit of flexibility for the platforms of how to structure transactions. And it's, of course, directly aimed at retail investors. So not business angels, more, the normal people that have a bit more money and capital to maybe invest. There's, of course, consumer protection, and there's education about this. But it's also open for sophisticated private investors. That even has been structured into the law. What that means, so basically business angels or people that are a little bit more affluent and therefore can also invest larger tickets. It's not like business angel investing, and it's not like a venture capital fund in this way. So there's a clear difference then. But ECSPR in particular was chosen to be designed between existing regulated frameworks in Europe to enable cross-border investments, which are usually otherwise quite cumbersome or quite intensive within the structuring of the legal instruments. So what can platforms offer there? They offer potentially additional investment opportunities to the business angels that they didn't have on their radar screen or that they couldn't access because of cross-border issues. I don't say they're all better, right? They're just additional investment opportunities, and it depends on which platform you work with or you want to work with. It might differ as well. Business angels and let's say other private investors that have a bit more money can lead the transaction or follow, right? You can just be like everyone else, just do a small investment, but you can also put in larger rounds. And there's also co-investment structures where, existing investors co-invest next to the crowdfunding platform. Funds cannot invest through the crowdfunding platform, but they could invest in the separate transactions, with the same transaction, then maybe on slightly different terms. And of course, the SPVs or nominee structures for those in the Anglo-Saxon markets make it quite a bit easier to manage investments and cap table, where then the receiving company has one investment vehicle, and all the small investors are bundled into this investment vehicle. So it makes it easier also to negotiate exits and further rounds later on. What kind of strategic roles can crowdfunding platforms that operate under this license offer you? Yeah, so for anyone who's interested in directly investing, maybe really small amounts, maybe testing new markets or certain companies to see how they progress, that is a fairly easy thing. There's of course a certain cost attached to it. You can co-invest, and then we have platforms that prefer to act as a co-investor next to a lead investor. And then the co-investor will benefit from retail leverage, and indeed also with something that the European Commission is promoting. And then crowdfunding platforms themselves, maybe that is the most important aspect that differentiates this from business angels, from venture capital funds, are not investors. So they are somehow intermediaries that manage the investment between the many investors and the company. They have to do due diligence. They have liabilities in the transactions. It's a public offering as that, but they are not as hands-on involved on exit strategies or development of the companies, which again explains why they like to work with lead or co-investors. Maybe because you're short on time, just one short example. If you go to the next slide. It has happened recently in Ireland, so just closed this year. So I thought it was quite interesting. It was a pharma medtech company founded in 2020, has 16 granted patents globally already. It's clinical tested, and it's basically moving its drug candidate along the line towards market. Before the crowdfunding platform that closed now, they had already raised around 17 million euros since 2019. So it is not an early stage company as such, or a startup. It has raised money from Enterprise Ireland, the EU Horizon and EIC accelerator programs, but also equity funding from others, like business angels, but also crowdfunding campaigns prior to this round. And so on this round, they actually wanted to move into phase 2 clinical trials. In this case, we don't have the pre-money evaluation, but you can make your guess there. And they were looking from crowd investors only 750,000 euros, and raised just under 900,000 euros from 199,000 investors, which would make it an average ticket of 4,500. But in all likelihood, there's some larger tickets and many smaller tickets in this. So just wanted to show you that this is not necessarily just for family and friends, or a really early stupid idea happens, but many platforms seek out companies that are already established, that have had a first track maybe record, and then can show something, maybe have co-invested with other investors here as well. And so they provide also, if you want, growth investing or bridge finance in certain cases. And I think that's fine. I would have another slide, but we leave that and we just move on with the 2 other speakers. And I hope Nora is able to stay here.
Before you go, Oliver, I mean, I'm based here in Ireland, and just to say that we all watched this with great interest, actually, through the Spark crowdfunding platform. And just to ask you if you think that this is maybe the way that some companies will go in the future, because obviously crowdfunding is still pretty much in an infancy. Like, where do you see it going?
Look, my guess is probably as good as yours. Let me be a bit honest. I used to work with the venture capital industry a long time ago, not as an investor, but I did a management buyout with venture VCs and angels. I worked with EFGA, as it was known then. And so for me, the limitation in venture capital and business angels is the scalability and the institutionalization of structures like VC funds, continuing for 50 years. Now, crowdfunding has the possibility to, because they can create a digital platform and have outreach, to basically take some away from this and make it easier. I don't think it will replace, I mean, you see from the structure, replace business angel funding or venture funding, but I would expect that more companies also look at crowdfunding and maybe add this into the funding mix.
We're seeing more companies doing this in Ireland, actually.
And I would hope that it works.
Thank you so much for your presentation, and we'll move to Lukas, Linn, and Lukas is investment manager at Invesdor. So come on in, Lukas. Thank you for joining us, and the floor is yours.
Thanks, Mary, and also thanks, Oliver. I will just share my screen so you can also see my presentation. And hello, everybody. It's a great pleasure being part of this workshop. I am Lukas, investment manager at Invesdor Group, heading the equity funding for the DACH market. So everything related to startup and VC activities. Invesdor Group is the largest or the leading impact investment platform in Europe. We are basically a crowdfunding platform that brings together private investors with impact-driven, growth companies. Our key investment areas are startup funding via equity, SME financing via debt, and also renewable energies via project financing. Invesdor started more than 10 years ago and grew by mergers and acquisitions with other leading platforms from Berlin, Vienna, Amsterdam, and Helsinki. These are basically also our core markets. And 2 weeks ago, we hit the magical number of 200,000 retail investors on our platform. They are basically private people like you and me from more than 100 different countries. And our transaction volume is approximately 600 million, out of which 2/3 are debt financing and 1/3 are equity funding. The next slide here shows our deal flow sources, both external and internal, and also an overview of our selection process in form of a funnel. We get to know many different companies from very different sources. The majority comes from our network and different events we attend all over Europe, but also from research in specific fields and from different partners such as associations and co-investment opportunities. And on top of that, we have an application form on our website where companies seeking for money just answer a few questions, and only a few of them make it to the next phase where we have a conversation with. In total, it's like not even 1% of the companies we see and talk with makes it to our platform for a funding round. So we are very selective, but at the end we say it's either a win-win-win situation or a lose-lose-lose situation. So rather having a great company selected carefully than just having different companies. Which brings me to the next slide. Some of our portfolio companies you can see here. You can also see our markets, DACH, Benelux, and the Nordics, and the different areas we are investing with. Everything related to impact, such as green tech, climate, real estate, food, energy, or life sciences. And I would also like to give you some interesting insights from behind the scenes, such as the fact that investors only take around 3 to 5 minutes on average on the pitch page before investing. And last year we had an investment volume of almost 50 million euros and financed the largest renewable energy crowdfunding project in Europe so far. In the Netherlands, interestingly, where only residents from Friesland, like from the region there, were allowed to invest. In total, 2,400 people financed a 27 million wind park. And the next slide here shows our business model and in equity funding. We consider ourselves the only German-speaking platform that invest real equity, not convertibles or participation rights or anything else, but equity funding through a trust foundation that gets explicitly founded for the financing round of a company. So several hundred investors get pooled in a so-called STAC, which is the Dutch term for trust foundation, which then is the only new shareholder entering the cap table of the company. And in return, the investors, like the private people like you and me, they get so-called depositary receipts, sort of certificates proving that they own shares in the company. And here are also some, information about our revenue model. We ask for a project management fee from the company, typically around 25,000 for all the effort in terms of campaign preparation. And in addition, we get around 6 to 10% of the actual funding sum on our platform. And then there's like
Lukas, can I just ask you, do you get much pushback from the companies for in terms of that fee?
Pushback in terms of?
In terms of the setup fee, the fee that you charge them, the 25,000.
Yeah, I mean, it shows that there is a commitment, but on the other hand, that's also typical. It's like, yeah, typical business model. We do not only prepare the campaign page for like one language, but for different ones. We also localize for the different markets. And most companies rather consider it as a let's say marketing reach, where they kind of reach out to 200,000 investors, potential customers.
Potential customers too, yeah, okay,
Yeah.
Get it.
So in this case, you would rather consider ourselves as a investment boutique than a classic VC, because this brings me to the next slide, that we understand ourselves as a non-strategic partner, as we don't take a board seat and we don't take the lead on funding rounds. So we are more like a, let's say, funding element on an existing round, and therefore require a strategic lead investor. That could be basically a business angel, VCs, or other types of investors. And the interesting, or the most important part here is that they should bring around, let's say, 1/3 of the total volume, while we are able to fill the round with the existing amount. Typically, our range, not from the funding round, but from us, is between 500K and 5 million. And our sweet spot is around 500K to 1.5 million. So if you are interested in co-investing with us, feel free to reach out to me. And the last content slide here, only because we were asked for our future plans. Here you can see the upcoming, the plan for our upcoming month to increase growth, both organically and by further M&A activities. We consider entering new European markets and new business fields such as real estate. And there are also some serious plans in setting up a fund or work with an investment company. And lastly, also to create a secondary market in order to trade shares of the different companies. This is me. Feel free to contact me, and thank you very much for your attention.
Thank you, Lukas, and we'll certainly be in touch with our Angel Syndicate in Ireland, because it looks really, really interesting what you're doing. So thank you very much for joining us today.
Thank you.
I'm going to move on to our next speaker, who is Gilles. I'm not even going to try to pronounce your last name, Gilles, for which I apologise sincerely, who's a director from Euroquity. So please join us. You're very welcome, and the floor is yours.
Hi, Mary. Hi, everyone. So do you see my screen?
We do, yes, thank you. And I see you as well. So yes, welcome on board.
Okay, great. So Euroquity is part of BPI France, which is the kind of one-stop shop for the French entrepreneurs. So what we are doing, we are financing, we are giving grants, we are investing directly and indirectly in the French companies. So last year we injected 60 billion euros in the French economy, and Euroquity is part of it. So we created Euroquity in 2008 to answer to a very specific need, is the connection between early stage companies and early stage investors, And we did our journey with the business angels, and especially the business angels coming from France Angel Networks. So where we are today, we are one of the leading platform in Europe and in Africa, connecting investors and companies, connecting also companies between themselves. So you can see here some figures. We have more than 24,000 active companies on Euroquity, more than 1,600 investors, from business angels to Series B, Series C investors. And we are in Europe, in Africa, in Canada, and we are opening Middle East countries this year. So what are we? We are first a digital platform, so you can connect on Euroquity, you can register, you can describe your needs when you're a company. When you are a business angel or an investor, you can get in touch with the company that is, corresponding to your investment thesis. And of course, the digital platform is it's very important when you are working at the international level, but it's not enough. We saw that, from many years now. So we have a team dedicated to support and facilitate the connections. We are organizing mini e-pitching sessions, webinars, and so on, directly or with our partners, but I will come back on that on the next slide. So we are relying on partners because BPI France, we know the French companies and not all of them, but we do not know the companies that are based in Kenya, that are based in Germany, etc., etc. So what we are doing, we are working with our colleagues there, meaning innovation agencies, public development banks, acceleration programs, and so on. And what they are doing, they are providing, their own ecosystem. They know the companies they are working with, obviously. They know the investors, they know the business support structures. So they are co-opting, they are qualifying, and they are encouraging, their ecosystem to join Euroquity. And this is what we are doing, in fact, in Euroquity. We are connecting ecosystems between themselves. We are connecting our partners, and we are connecting our companies, their companies, and their investors. What is important also is that all these partners, they are paying us, they are contributing to the business model of Euroquity. This is free. It will stay free for companies, for investors, for business, support organizations. So only, I would say, organizations that are supporting entrepreneurs, they are paying a fee to be part of it. Then, what are, I would say, the key benefits for investors that are on Euroquity? I will share two of them. The first one is to find co-investors, and co-investors not only, between, I would say, the different layers, between, Series A VC or business angels and so on, but between the layers, because we saw that it was also super important for us to give the possibility, for instance, to business angels to support the companies to go to the next round and to find pre-Series A or Series A VC funds. So we are doing that at scale now with many, many investors in many different countries. And then the impact for the business angel networks, the business angels, and of course early stage VC funds is to, I would say, enhance the growth of their participations, because what we are doing is providing additional, I would say, cash, but also to find business partners around the world. So we are working for many years now with business angels, and we are happy and proud to partner with BAE, of course, and IBAN. We created a specific format to support also business angels, because we wanted to promote, business angel networks and business angel, federation in different countries. We wanted to attract entrepreneurs to become business angels, for instance, and we wanted to support the connection between early stage companies and business angels. And we are part of ESIL, of course. You can see here a map. We do not have all our partners, but you can see, for instance, in Canada, we are working with the Development Bank of Canada, which is our counterpart there. In Greece, this is the Hellenic Bank of Development, etc., etc. And this is a way for us to access to a very, very qualified deal flow. Because our success, to be straightforward, is linked to the quality of companies that are on Euroquity. Because the investors, they want to come to access to this very qualified and curated deal flow. And this is what is working super well. We are involved in many, many programs and projects, especially those coming from EIC and coming from the European Commission. In fact, we are involved in almost all of them. supporting transition and Pathfinder companies to the EIC accelerator companies. We are in the EIC Scaling Up project, supporting the most 120 promising, the most promising deep tech companies, looking often for more than 50 million euros, in capital. Probably 30% of them will be valuated over 1 billion euros in the coming months. And you can see here, many partners who are working with, top investors, in each country, so it's, again, they are working with us for many, many years. Some results this year, 2024, we do not have, all the results, but for the time being, the companies that use Euroquity, there was more than 350 million euros. I guess that we will close around 600 million euros. We are organizing many pitching sessions, 64 in 2024 for 463 companies. We did 1,300, qualified matchings between investors and companies. So it's becoming something very huge. Then to conclude, some future developments. The first one, it was said before, from our colleagues coming from India, but we will have AI features on Euroquity, because now we have the digital platform, we have my team and the team from all our partners, in Europe, Africa, etc. But in the middle, we want to have AI, to have, the first recommendations for companies and investors to get in touch with, other companies or other investors and to do business together. Good news, this new AI feature will be online tomorrow. So it's completely new.
Super.
And of course, we will grow. Just for you to know, everybody will do AI, but we will not do the same, because the data will come only from the companies or the investors themselves. We will do not do, I would say, scrapping on public data. So companies, they will put inside, the AI what they want to do and to be used to.
Everyone will have a lot of questions for you at the Q&A session on that particular
and we will continue. So
feature,
this is it on my side. Thank you, Mary.
Thank you so much. Thank you, Gilles. That was really, really interesting and such a broad coverage of everything that you have there. Thank you very much.